A Look at Finance is underwritten by Janney Montgomery Scott, trusted advisors for generations.
Welcome back to Look News. It's Thursday, our weekly appointment with Stephen Carleton, First Vice President from Janney Montgomery Scott.
Thanks, David.
Great to have you here. A lot of stuff going on. We're taking kind of a bigger look at the economic picture tonight, looking at a lot of national numbers. And I guess everybody who has stocks is watching what's happening on the stock market today. Some big numbers, big gains.
Yeah, this is an important inflection point. Today was all-time high, not just on the Dow, not just on the NASDAQ, the S&P 500, right across the board. This is the summertime. Everybody's supposed to be away, enjoying the summer out at the lake. And the stock market has been just going like crazy.
Let's take a look at the numbers. We have the Dow today, which closed, the first of the three markets, obviously, to close at the record high. If we can take a look at the numbers from Wall Street today. The Dow up over 128 points. As you said, these stockbrokers are supposed to be out in the Hamptons,
yes,
enjoying summer, but it seems that the markets are rallying.
You know, there's definitely some indicators today that were surprising, a little unexpected, but these are really good, encouraging numbers, and I think they're going to have an impact as we go into the fall.
You know, what is behind this? Because, you know, it seems that we've got the quantitative easing going on, we've got sequestration going on the government level, and the markets are going in a completely different direction than was predicted.
Yeah, there's a lot of uncertainty. As we finished last year, there was a lot of concern about sequestration. Like you said, quantitative easing, was it working, was it not? And a lot of the measures, a lot of the benchmarks were giving conflicting signals. What we've seen today, and some of the numbers we'll go over, is that the underlying things that we measure, like manufacturing, sales, consumer spending, are starting to show strength. Even while the government is cutting back on spending, we're seeing consumers and businesses stepping up, which is very, very important right now.
Can we continue this pace?
Well, that's the tricky part, right? The crystal ball is a little foggy the farther you get out. But what we've been waiting for is, like what we started talking about, David, back in January, February. We were waiting to see the unemployment numbers drop. We were waiting to see some of these indicators start to stabilize and actually reverse. And we've seen unemployment go from, 9 down to 8, down to, we kind of stuck in that 7.6 range. And, the hint is that tomorrow we could see that number drop even better. So there's some definite positive signs going into fall.
All right, keep watching that. Something that is an interesting number that came out was the fact that the manufacturing in the U.S. has accelerated more than forecast. Of course, talking about the government cutting back on spending, we thought that would have an impact on manufacturing numbers, but it doesn't seem at this point to be having an impact. Manufacturing is ramping up as we speak.
Yeah, I think a lot of the cost cutting, a lot of the tightening up that we did over the last few years has really enabled a lot of the manufacturing base in this country to reevaluate some of what they're doing. And the Fed has come out for this year and they've said, the numbers are going to get better. And some of the numbers that they were using, people said, we don't see it yet. But today, that was the first real justification, real indicator, forward-looking, that the Fed can say, here it is. Things are getting better. Yeah,
the Bloomberg survey of economists said that the factory index jumped to 55.4. The previous month it was 50.9. That's a pretty big jump. A reading above 50 indicates expansion in the economy. Are they selling these items that they're manufacturing? Where's all this stuff going?
Well, there's so many moving parts to this actual measurement. So, it's difficult to break it down and nuance it in a 2-minute segment. But what companies are deciding to do is they're deciding to manufacture. They're not idling. They're not laying off. They're turning the plants on and they're producing. So obviously these companies feel as though they're coming into some sort of strength to justify the expense. So how that breaks down to the different sectors and different industries is going to be a little bit more complicated, but overall it's a positive sign.
All right, let's take a look at one of those industries, the auto sales industry here in the United States. Not just American car manufacturers, but car manufacturers that are building cars right here in the United States. We're looking at the numbers on the screen. For July, they say the U.S. auto sales in July were accelerated near levels of 2007. GM up 16%, Toyota 16.5%, Ford and Chrysler 11%. They're producing quite a few cars coming off the production lines. Are they selling these cars, or what's happening with them?
So this is a very interesting question, David. The way a lot of auto manufacturers book their sales is when they actually produce or manufacture the vehicle. It goes to the sales lot, and eventually it's going to get sold, but the dealers, the manufacturers themselves, book it after they make the vehicle.
Okay.
So this increase, again, is an indicator that the auto manufacturers feel like they're coming into strength. They feel like the sales are going to be there. And, I mean, these are great numbers. I mean, these are 2007 numbers at the peak of the market. I mean, these improvements are quite large.
It'll be interesting to see if when you drive by the car dealership that those lots are full of cars because nobody's buying. I mean, folks on the street level are still struggling. So, you know, I know, a lot of people don't have the money to go out and shell on a new car. So we may see some sales coming down the line when they're trying to clear some of these things off.
You probably have heard it on the radio, and you've probably seen it on the television. Aggressive lease packages available, aggressive loans, zero interest coming back. Those kinds of things dealers and manufacturers are bringing back because it's moving the vehicles. So they are getting some traction, but the days of people buying a vehicle with cash, long gone.
You may notice that on TV around 2007, every other commercial was a car commercial, and those dried up for a long time, and all the auto dealers are now back to really pushing cars. If you watch any station at night, it's car dealership, car dealership, car dealership, car dealership.
Yeah, that's the reality of how people are doing it now. People aren't buying homes, they're renting. The demographic is shifting. The middle class is being a little bit different in how they purchase things. But the bottom line is whether the vehicle is leased or whether it's purchased outright through a car loan, doesn't matter. The manufacturer still books the profit. Those are those good, solid-paying jobs in this country. So that's good news for our manufacturing base.
You know, I guess the take-home here is there's a lot more than just the numbers. You can read the numbers and you say, okay, auto sales are up. Not necessarily. The thought that the projection down the road that auto sales could be up is what we're getting at.
Yeah, what we want to see is trend. You know, like we talked about unemployment, I was waiting to see it go down below 345, and I said once that trend breaks, that will be a real strong indicator of a direction. Same thing with this auto manufacturing, these sales numbers. I'd like to see 3 or 4 months of this, that a trend starts to develop. That'll give us more and more confidence, and the consumer will be even more confident to go out and do these kinds of things.
All right, in the months to come, we'll take a look and see if those auto numbers continue the same. This could be another trend. Jobless claims falling to 326,000 for the week of July 27th.
Yeah.
Also some other things happening here in the background with these numbers.
You know, a lot of talk has been, well, you know, are these well-paying jobs, are these full-time jobs, are they part-time jobs? And there's no question that there's far more part-time jobs that are coming out than full-time. So the unemployment numbers are getting better. There's not as many people being laid off. But that's an encouraging sign. But there's still more work to do. But the lower that number gets, and that number tomorrow, the Labor Department number tomorrow, if it's around 185,000, those are going to be really encouraging signs. We'll see that 7.6 hopefully drop down to 7.5%.
I guess it all comes full circle because we're talking about people getting jobs, but they're getting part-time jobs where they're not getting benefits, they're not making the salaries that they would have at one time. So you're looking at car sales, manufacturing, and there's just people aren't making the money to sustain this level of growth. Yeah,
there's no question that what we need is we need good quality jobs. We need jobs that pay a livable wage, that have benefits, that have health care coverage. You know, that's what this country needs more of. And, you know, I think the mood is starting to get stronger, a little healthier, and that's encouraging.
All right, real quick, some word today that could be a lady taking over the Federal Reserve.
Yeah, buzz is really starting to build right now. So Ben Bernanke is getting closer to finishing his term, and there's talk between Summers and this
Susan Phillips.
Susan Phillips, who's really...
It'll come.
Yeah, no. See, here's the thing that's interesting about this, is it's not done yet. Obama's working on it. There's a number of people that are in play still. Yellen's still in play. There's others that are working towards this. But the idea of having a woman lead the Federal Reserve, there's never been one. It's been a male-dominated field. The board is all made up of males. This is a fascinating picture. And if this ends up happening, it'll be interesting to see how that particular perspective changes the old boys club on Wall Street. And, you know, I'm very intrigued to see how this plays out.
And I know you've got a lot of thoughts on this. It's the first time I think I've seen you pause to think about something on air, but I know that you have a lot of thoughts about this, and we're going to be talking about this in the coming weeks as Ben Bernanke moves out of the Federal Reserve and somebody else moves in.
Yep, it's gonna be very interesting to see it unfold, no doubt about it.
Carleton, first
Thanks,
Vice President, Janney Montgomery Scott. Always leave this segment smarter.
Thank you, David.
Thank you, sir. Now, to see this and all our Look at Finance segments, head to the website. It's looktvonline.com.